Folks, you better strap in. It's going to be a wild ride. Congress is making moves on 4 hot stocks, and these picks might just be primed for a major breakout this September and heading into election season. We're talking everything from defense contractors to artificial intelligence to specific key resource segments. And folks, you don't want to miss out on what could be the next big thing. But Charlie, why should we care what Congress is doing? Congress is terrible with money. Well, no, folks, Congress is terrible with our money, but Congress is really, really good with their own money. Congress routinely beats the S&P 500, many members by a very large amount, and that's probably because these politicians are sitting inside many closed-door committee meetings and voting and talking on bills that directly impact their holdings. Pelosi and her husband made countless millions betting big on Nvidia right before its massive rally this year, and Congress also loves to save themselves from destruction. Members of Congress sold before the Lehman Brothers collapse in 2008. Members of Congress sold before the pandemic shutdowns in 2020. Members routinely sell before big federal investigations are announced. And look, folks, you and I know this. One of the best ways to get rich quick is by looking at what Congress is buying and, of course, avoiding what they're selling. In fact, investors are so used to this trend that tweets went viral yesterday saying Nancy Pelosi actually reversed and sold all of her Nvidia stock one day before the DOJ subpoena came out. Now, we don't know yet if this will be true because disclosure rules say we don't have to be informed of this immediately, so it's going to be some weeks or even months before we actually get the filings to disclose whether or not she did sell right before the DOJ subpoena. But the bigger point here is there's a long history of Congress making moves right before key events happen, and so whether you think they are trading on privileged information, whether you think they are just very lucky little lucky McLucksters, or whether you think they're just little Albert Einsteins, well, still, nonetheless, they outperform, so it makes sense to pay attention to what they are buying. So in today's video, we're going to walk you through the top 4 stocks they are buying that are set to rally in September 2024 if Congress is to be trusted to manage their own money and look out for their own interests, which I think is a pretty nice bet, honestly. And the only thing I ask for all the work that goes into making a video like this is that you hit that ravishing like button and subscribe, and of course, never forget, if you're the one doing the risk, if you're the one taking that ultimate risk, you got to be the one doing the ultimate frisk. Lots of people, they get real risky without doing their frisky and vice versa. Okay, let's start with number 4, Lockheed Martin, LMT. So Congress absolutely loves buying defense contractor shares. It's one of the easiest buys because if you know you're going to be voting on wars and government contracts, you know that LMT isn't going to go down anytime soon. Lockheed Martin is one of the most recognizable names in defense, aerospace, and security. Headquartered in Bethesda, Maryland, Lockheed Martin is a global leader in the development of advanced military technology, space systems, and integrated solutions. The company's mission is to maintain leadership in the development of innovative solutions that enhance global security, protect citizens, and advance exploration. Now here's the key, folks. Lockheed Martin's biggest client by far is the U.S. Department of Defense, the DoD, which contributes more than 70% of its total revenue. Imagine you could buy a stock in a company that you control the revenue for. Oof, sounds like a good deal to me. Well, that's basically what Congress is doing. The company also works closely with NASA, foreign governments, and commercial partners. But the key aspect of their success lies in long-term contracts with the U.S. and allied militaries, ensuring a very steady revenue stream. The only way that Lockheed Martin goes into a bear market is, quite frankly, if we get into a massive period of world peace, which sadly and quite frankly isn't a bet that I'd want to take. At its core, Lockheed Martin operates in 4 key segments: aeronautics, missiles and fire control, rotary and mission systems, and space systems. The aeronautics division, which produces the famous F-35 fighter jet, is the largest revenue driver. In addition to military aircraft, Lockheed Martin designs missile defense systems, unmanned vehicles, and cutting-edge space technology. Whether it's dominating the skies with the F-35 or building Orion spacecraft for NASA's missions to Mars, well, Lockheed Martin is at the forefront of the defense and space race. One of Lockheed Martin's biggest growth drivers is this F-35 program, though the company has contracts for over 3,000 of these jets, and the program is expected to generate revenue well into the 2030s. Lockheed's also got a lot of diversification into things like hypersonic, missile defense, and space systems, and they offer a tremendous amount of growth potential as the world faces evolving security threats, which sadly again are ticking up. With increased global military spending and emerging areas like space defense, Lockheed Martin is set to grow in ways many traditional defense companies wouldn't dream of. One of the key catalysts for Lockheed Martin's future stock performance is its involvement in space and cyber defense, as the US and other nations prioritize space as the next frontier for military operations, while Lockheed's capabilities in satellite defense and space vehicles will become increasingly important. Additionally, the growing focus on cybersecurity within the defense sector positions Lockheed to capitalize on new contracts related to cyber warfare and AI-based defense solutions. These are high-growth areas where Lockheed's expertise is quite frankly invaluable. So I think it's pretty clear that Lockheed Martin LMT is a dominant force in defense and aerospace, and it's not going anywhere anytime soon, anywhere except for straight up, with a strong pipeline of contracts, leading technological innovations, and involvement in high-growth areas like space and cyber defense. The company offers significant upside potential, and that's why I believe that Congress is buying it. Okay, number 3, APD, Air Products and Chemicals Inc. This stock is on a very healthy uptrend and is poised to continue growing, but what exactly do they do, Charlito? Well, Air Products and Chemicals Inc. is a leading global supplier of industrial gases and chemicals, quite gassy. APD operates in over 50 countries and plays a crucial role in enabling production efficiency and sustainability through its innovative gas solutions. Its mission is to supply reliable, cost-effective gases and chemicals while pushing the boundaries of clean energy technologies, particularly in hydrogen. APD's core business revolves around the production of atmospheric and process gases such as oxygen, nitrogen, argon, hydrogen, and carbon dioxide. Their services extend into the equipment supply and engineering for gas production plants. The company's major market segments include industrial manufacturing, healthcare, electronics, chemicals, and energy. One of its primary focuses is on green hydrogen production and the overall decarbonization of energy systems, which aligns with the global shift towards more sustainable industrial processes. Now let's talk partnerships. You see, APD works with some serious heavyweights like Samsung, ExxonMobil, and Boeing. These long-term partnerships allow APD to secure stable revenue streams while aligning with companies at the cutting edge of innovation. These partnerships allow APD to have VIP access to industries that are literally driving the future, and certainly some future profito. Now, why might Congress be buying this stock? Well, APD is deeply involved in hydrogen production, particularly green hydrogen, which is seen as a key solution to reducing global carbon emissions. Congress members who have insight into regulatory trends and government spending might view APD as a prime beneficiary of the shift towards clean energy. With the U.S. and other governments committing substantial resources to green technologies, APD stands to gain from policy support and investments in clean energy infrastructure. Congress has passed various infrastructure bills that allocate funds to clean energy projects, including hydrogen. APD is already investing billions in new hydrogen plants and carbon capture technologies, positioning itself as a leader in this area. Lawmakers may be betting on the company's growth as government funds flow into these types of projects, potentially driving up demand for APD's products and services. Now, in terms of upcoming catalysts, there are some big events on the horizon that could send APD stock shooting higher. First, they're investing billions into green hydrogen production, with several major projects set to go online over the next few years. Then there's carbon capture. Industries worldwide are going to need this tech, and APD is ready to supply it. Plus, they're continuously expanding their reach into emerging markets, meaning more opportunities for revenue growth. The road ahead looks pretty exciting for the stock, and that's perhaps why Congress is buying it. Perhaps Congress is onto something here, and the stock is already on a long-term upward trajectory. Okay, number 2, Chubb, CB. Based in Zurich, Switzerland, Chubb operates globally with a presence in 54 countries, providing insurance coverage across both personal and commercial lines. Its mission is to deliver superior insurance products, maintain financial strength, and continuously enhance shareholder value. Whether it's protecting individuals' homes or offering businesses commercial liability insurance, Chubb has earned a reputation as a reliable and innovative insurer. Chubb is one of the world's largest publicly traded property and casualty insurance companies, renowned for its broad product offerings and a history that dates back to 1882. Chubb has quite a chubby influence with some big major clients, spanning from individuals to multinational corporations, making the company a go-to provider for a wide range of industries. They work with financial institutions, energy companies, and even high net worth individuals who require specialized insurance for their assets. Strategic partnerships with brokers, agents, and other intermediaries are crucial to their success, allowing them to distribute products effectively in global markets. In terms of the financials, Chubb is a rock solid performer. In 2023, the company posted revenues of over $42 billion and consistently maintained a combined ratio, a key profitability metric for insurers, well below 100%, indicating strong underwriting profitability. Their net income has also shown steady growth, reflecting their disciplined approach to risk management. it. But why exactly might Congress be buying it? Well, you see, folks, one of the hottest areas in insurance right now is cyber risk, and Chubb is positioning itself as a leader in the space. As companies face increasing threats from cyber attacks, the need for comprehensive cyber insurance is exploding. Chubb's ability to underwrite cyber risk more effectively than its competitors gives them a huge advantage. With new data privacy laws and regulations on the horizon, which Congress must know about, well, this market is expected to grow significantly, and Chubb is well positioned to capitalize on it. Right now, Congress might be aware that new legislation around data protection or cyber risk is on the horizon, something sweeping and something that's going to be a gold mine for Chubb's business model, making its stock much more attractive than even the naked eye could see. And number one, we've got Viavi Solutions, Inc. VIAV may not be as widely recognized as some tech giants, but it's a key player in the world of network and optical technology. Headquartered in Scottsdale, Arizona, Viavi specializes in network testing, monitoring, and insurance solutions for telecommunications, data centers, and enterprise markets. Their mission is to provide innovative solutions that ensure the reliability and performance of modern communication networks. From 5G technology to fiber optics, Viavi's solutions power the networks that keep our digital world connected. Viavi's client base reads like a who's who of the telecom and tech world, including major telecommunications providers, cloud operators, and equipment manufacturers. They have deep relationships with companies like AT&T, Verizon, Cisco, and Nokia. These partnerships are essential as they enable Viavi to stay ahead of technology trends and secure long-term contracts for 5G testing, network monitoring, and optical products. Strategic alliances with equipment manufacturers who give Viavi an edge when new technologies like 5G or cloud infrastructure rollouts occur ensure they're a critical part of the deployment process and continue to be so. So why exactly might Congress be buying into Viavi Solutions? Well, there's several key compelling reasons that I could find. Number one, they're a leader in 5G. Viavi is a key player in the global rollout of 5G networks, which are critical to the future of telecommunications. Congress, aware of the U.S. government's push to remain competitive in the 5G space, may see Viavi as a way to capitalize on the expansion of this next generation technology. Number two, you've got telecommunications infrastructure spending. The U.S. government has been heavily investing in upgrading telecommunications infrastructure, including 5G and broadband expansion. Viavi's testing, monitoring, and assurance solutions play a key role in ensuring that these networks function efficiently, and Congress members might view Viavi as a key beneficiary of federal spending programs that aim to strengthen U.S. telecom infrastructure. The other point is cybersecurity and network assurance. Viavi is involved in network assurance and cybersecurity, which are, of course, key concerns for government, and Congress has prioritized cybersecurity legislation and defense spending to protect against cyber attacks, and Viavi might end up getting some of this capital, which could make it an even more attractive investment. Viavi's strong partnerships with major telecom providers and its involvement in government-related projects, such as security solutions for currency and identification, make it very, very attractive and could attract some big government contracts, which could come from a variety of different government agencies that Congress could directly vote on. So anyways, that caps off today's video on the top 4 stocks Congress is buying right now. If you appreciate content like this and would like to see more, all I ask in return is that you hit that ravishing like button and never forget to subscribe, and we will see you in the next one.